afternoon, everyone, and welcome to Stock Market Today for Thursday, August 14th. It's Alissa Coram here, and a mildly mixed day with small caps lagging in the session. Joining me now to break down the action is my colleague, Ken Shreve. Ken, what do you have for us today?
Two large.
We'll be joined by Ken Shreve here momentarily. There he is. Go for it,
I'm
Ken.
here. All right. Let's take a look at two large cap tech names. Ali, want to start with Netflix, NFLX, also Amazon, AMZN, and finish off with a discussion of Insulet, which is a diabetes care company, PODD. Had a good earnings report and setting up pretty nicely here.
All right, we'll take a look at those stocks. But first, as always, let's take a closer look at the major indexes. So we have the NASDAQ today fractionally lower, Ken, just by a hair here by session's close, and the S&P 500 fractionally higher on the day. Meanwhile, the Dow fractionally lower and the Russell 2000 lagged today, down about 1.2%, though it did close off lows. And just for that step back perspective, it's still been a pretty big week for small caps, with the Russell up about 3.7% so far for the week. What are your thoughts on the action, Ken?
Well, starting with the Russell 2000, go back to the daily chart. I mean, you had 2 days of fairly explosive gains for the small cap index. So this would be, a decline of 1.2%. That actually looks pretty orderly to me. It closed up near its highs. Buyers came in, lifted those small cap index off lows. So again, after 2 days of big gains and a unequivocal breakout for the Russell 2000. I think it digested gains pretty well today. So even though it lagged, I thought overall, the market showed a lot of the broad market showed a lot of constructive action.
Yeah, and here's a look at the NASDAQ. Anything notable about today's session for the tech heavy index?
Other than the fact that we've just been talking about how strong the Nasdaq has been, we've seen some growth stocks start to come under selling pressure. We saw more of it today, but even when you look at a lot of top rated growth stocks in the IBD 50 or the market surge growth 250, there's still a lot of growth stocks that are holding above short-term support levels. So, we had some pretty bad earnings sell-offs today for a name like Coherent, COHR, which had been performing pretty well. This is fiber optic cables, and pretty ugly reversal yesterday. And then they reported earnings, and Tapestry TPR, pretty violent selling in Tapestry today. This is the parent of Coach. So even though the indexes are still holding near highs and trading very tightly, you're seeing some stocks start to get damaged below the surface. So we're just kind of looking. I mean, we focus on growth stocks, so it's important to pay attention to. So we're kind of balancing, how are growth stocks acting and how is the general market acting. And while growth has come under a little bit of selling pressure, we're not seeing widespread sell signals yet. So still respecting this uptrend.
What do you make of the market's action today in the context of the inflation data that we just got out?
It was very similar to the reaction to the consumer price index earlier in the week. Yes, most of the CPI data was in line with expectations. I mean, core prices on a year-over-year basis rose to 3.1%. That was actually above expectations, but the market, shrug it off. So today we have the latest reading from the producer price index, which is basically a measure of wholesale prices, and that was much hotter than expected. Yet the market is just kind of shrugged it off again. So the market clearly is placing its bets that the Fed has engineered a soft landing for the economy. The Fed is still concerned that inflation still could be sticky, but it's looking pretty likely that they're going to cut by a quarter point in September. So the market just seems to be focusing on the prospect of lower interest rates and the fact that inflation is not going to be an issue despite these tariffs. So we'll see if the market ends up being right, because the Fed still has some questions about inflation and if we're going to see it elevated, later this year.
Right. Okay, let's take a look at XLF. An ETF we've been keeping close tabs on. That's the financial sector, up about a 0.5% today.
Yeah, this is encouraging because we're seeing a lot of nice setups in the financial sector. We looked at Blackstone yesterday, BX, and the asset management group, but really like the setup here for XLF. It is seems to be setting up for another possible breakout here. So like the fact that financials, even though a lot of some growth stocks have come under selling pressure, seeing a lot of outperformance in the financial sector. And we have a name like JP Morgan, JPM on leaderboard that is really acting well. This is one of XLF's top holdings. You can see nice breakout from a double bottom base and just coming in very gently to its 10-week moving average here. Relative strength line is still strong. So JP Morgan is a good example. Financials showing strength and seeing still a lot of good setups out there. So encouraged that financials continue to do well here. And if honestly, if the economy were really headed for a soft patch, I don't think you'd see financials doing as well as they're doing right now.
Great point. Okay, let's take a look at more names of note, starting with Netflix right at that 50-day line, trying to carve out the right side of a base, Ken.
Yeah, there's a lot of great stuff going on at Netflix. They recently they stopped counting or releasing their subscriber numbers during their quarterly earnings announcements. But we just had a great story on the front page of IBD just a couple of weeks ago, talking about how Netflix is sort of kind of turning and taking a page out of Disney's playbook, looking for immersive in-person experiences, maybe capitalizing on some of their really successful shows. Like I knew I was gonna forget them. Stranger Things is one. So we'll see. They're gonna try to reignite growth. Subscribers have 300 million subscribers at the end of last year, so they still have a lot of subscribers, but it's just not growing as fast as it did. So Netflix looking to open up these some Netflix houses at the end of this year. I know one is going to be opening in Dallas and another one in Philadelphia at the end of the year. So Netflix doing some new things. They've been kind of branching into live sports, live entertainment. So some new things going on in Netflix that could fuel additional gains here. So
Mhm.
Reed Hastings, tough guy to bet against, and Netflix is trying to form a new base here. We'll see if it can conquer the 50-day moving average, and we put it on the leaderboard watch list today. It's been in the leaderboard model portfolio before, just because it's always been a strong
Mhm.
performer. But like the way the base is setting up here.
Yeah, perhaps with a little bit more oomph above that 50-day line, we might see a compelling early entry here.
Yeah, it's kind of close to breaking out of a downtrend, and not surprising. I mean, that 50-day moving average today, at least, was just a minor resistance level. But if we can, and volume, did pick up the pace today. So if we start to see more subtle signs of accumulation here, should be able to make more progress towards that recent high.
hmm Okay, let's check out another mega cap tech stock, and that's Amazon, up 2.9% on the day. Elevated volume here. We had news on Wednesday of Amazon expanding its grocery delivery service, and analysts cheering that today. So, a follow up on that news today with an investor reaction and an actionable opportunity here, perhaps.
Well, it was a negative response to earnings a couple of weeks ago. That was a pretty bad gap below the 50-day moving average, but it didn't take long for Amazon to recover. The numbers weren't bad. There was a little bit of maybe a slowdown of decelerating growth at their cloud computing unit, Amazon Web Services. Their outlook for the third quarter was probably a little conservative, so that's what fueled the selling. But there's been some volume on the way back up here, and now it looks to me like Amazon is threatening a breakout here. Anytime you can see a marked high, 236.53. clear as day. Volume picked up the pace a little bit today, so we'll see if Amazon can eventually take out that recent high
Mhm.
of 236.53. We're still in a really nice uptrend here in terms of the major stock indexes. So wouldn't be surprised to see Amazon continue to do well here. Another option, because it's up, what, 6 days out of 8. Maybe as it gets closer to that 236 high, it'll start to drift lower a little bit. Either way, Amazon, not actionable at all after that earnings gap down, but it has righted itself, and I think it's on a candidate to break out here.
Mhm. Yeah, I think it depends on your perspective. This was our stock of the day today. I think perhaps some aggressive traders could have used the high from a couple of days ago around that 226 area as a signal to perhaps initiate a position. Also, if you look at the weekly chart, a retake of the 10-week line. So, for more information, you can check out our stock of the day article. And last on our list to review here before some earnings after the close, let's take a look at medical products name Insulet, ticker PODD.
Yeah, this is diabetes company. They have this Omnipod platform. It's basically the Omnipod insulin management system, and this is kind of very unique, very different from Dexcom and some of these other diabetes companies. The Omnipod system, basically, people get their insulin. Uh, Underneath the skin, so it's called subcutaneous. And what's interesting with Insulet is that this Omnipod platform, they're actually looking to it outside of diabetes. So this is their main money maker right now, as just an insulin delivery system for diabetics. They don't have to prick their fingers. It's just delivered underneath the skin. But they're looking at other drugs that this platform could possibly be used for. So I think this is interesting for Insulet. And anytime a stock moves, this is two straight quarters where the stock has really jumped on earnings. 3 months ago, you can see it gapped up powerfully over that 300 level. It gapped up again just recently, closed off highs, but it seems to be sort of righting itself here. If you look at the results over the past 2 quarters, I think it's worth noting here, because you had the bottom line in the first quarter was up 67%. It accelerated up 113% in Q2, and the revenue has also been accelerating. So you like to see that in a stock. It not only say does it tell you that they're selling a lot of product, but that growth could continue. And if they can find other indications for this Omnipod platform, could drive even more growth here. So fundamentals look good, and the technical setup doesn't look bad either.
All right. Let's check out Applied Materials earnings out after the closing bell. Ken, looks like this chip equipment maker not faring so well. The early reaction, shares down 11%.
Yeah, this is interesting, because this is probably one of the laggards in the chip equipment group. Applied Materials is obviously a giant and a well-known name and a bellwether in the chip equipment industry group. But you see its relative strength rating of 51 just hasn't performed nearly as well as other high quality names in the group, like Lam Research, LRCX, also KLA. You can see their relative strength ratings are much higher. They've been showing much better price
Mhm.
performance. So what AMAT says could move chip equipment stocks, no doubt about it. With the stock down 11%, but I think you probably see the cream rise to the crop in this industry group. You want to focus on the leaders. Applied Materials has been lagging,
Mhm.
for a while. So we'll see what the numbers look like, but negative reaction so far.
Yeah, it looks like the outlook was poor here. And as of now, it is hitting these two peers that are better performers that you mentioned, KLA and LRCX. I'm seeing both down about 5%. As of now, we'll have to see how that reaction plays out in the regular session come Friday.
Yeah. Didn't want to just to mention one thing on breadth, which I didn't mention at the beginning when we were talking about the indexes, but it was sort of like a flip flop of yesterday.
Mhm.
Today we had pretty weak breadth, negative by about 2 to 1 on the Nasdaq, and it was almost 3 to 1 on the NYSE. So on a day where the S&P 500 was flat, here again you have your equal weighted RSP performing a lot worse than
Mhm.
the S&P 500, and same with QQEW. I believe that was down more than the Nasdaq
Yeah.
100 today. So you're kind of getting breadth swinging back and forth each day. Tough to get a read on that. You have some growth stocks under some selling pressure, so it's a bit of a strange market right now. But for growth investors, you got to tread cautiously. We saw a rotation yesterday into some of the home builders and even biotech stocks did well, and we'll see if money's going to rotate out of growth stocks. It's still very early, but really like how the indexes are holding up well here.
All right. Great comments to end on there. We appreciate it, Ken. We'll have to leave it there. Thanks so
Oh,
much.
okay, thank you.
Thanks everyone for tuning in. That is it from us for today, but we will be back with more tomorrow morning on IBD Live, investors.com/IBD Live for all the details on our daily morning live stream starting 10 minutes before the opening bell. So we'll see you there at investors.com/IBD Live. And we'll also see you right back here tomorrow after the close for our stock market today video featuring myself and IBD's senior market strategist, Mike Webster. We'll see you then.